Hey everyone, Coach Investor back to another video for today. So let's talk about NIO. The stock is up around 25 or more in the last couple of days. Yesterday on Thursday it was up 8% at the time of making this video. Pre-market it's up another close to 4%. So what exactly has happened since that not so good earnings report? We're gonna have a look at all of that in this video, but let's first start with what is happening right now. So we've gotten a little comment here from Deutsche Bank. So they say NIO's urgency to capture volume and cut expenses is finally here. We can see here the NIO monthly deliveries. It has really been very inconsistent for a long time. Now, Deutsche Bank says here our main takeaway following the Q1 earnings and hosting NIO management CFO in person in New York City this week is that the urgency to capture volume and cut back spending is finally here. With NIO's broad price cuts and the rapid rollout of the new 2.0 model, its sales can rebound considerably in the second half of the year, paving the way for 20,000 units per month. Now, if you need a quick reminder, this was in March, so the EV maker NIO surged, very confident of hitting sales goals. So the Chinese car maker expects to double sales to 250,000 this year. The price war shows China has too many automakers, according to the CFO. So they said here we are very confident to achieve our sales target in 2023. That will be achieved with new models, expanding the company's charging and battery swapping network, and unlocking autonomous driving technologies. Now, of course, this was in March. Since then, we already have the Q1 earnings report. And to be honest, to reach 250,000 this year, to me, seems a bit impossible. I'll show you why. So first up, they said here vehicle deliveries were 31,041 in the first quarter, consisting of 10,430 premium smart electric SUVs and 20,611 premium smart electric sedans, representing an increase of 20.5% from the first quarter in 2022, but a decrease of 22.5% in the fourth quarter of 2022. And this you can see here from Q2 2021 up until Q1 2023. They've increased deliveries by 10,000. Of course, you can see the huge decrease here between Q4 and Q1. Now, not only was this an issue, the major issue is margin. So vehicle margin was 5.1% in the first quarter compared to the 18.1% in the first quarter of last year and 6.8% in the fourth quarter of 2022. Margin has been coming down, and so losses have been increasing as well. Of course, the company has been investing heavily in their own infrastructure, so that in the future, margins should go up again. They still expect to return to those 18-20% margins in the future. Remains to be seen what happens, especially with the price wars currently. Now, as for the deliveries in April and May, they said they delivered here 6,658 vehicles in April and 6,155 vehicles in May. And we've gotten a comment here by the CFO and the CEO. So with the volume ramp up of our new models, including the all new ES6, our teams are well prepared for a solid growth in vehicle deliveries. In the face of the changing market environment, we will observe and analyze the dynamics of the operating environment and competition landscape promptly and continue to strengthen our competitive advantage in an agile and efficient manner. Meanwhile, we will stay focused on execution, optimize cost structure, and further improve our operating efficiency. Now, for the guidance for next quarter, when you look at deliveries of vehicles, it is again a decrease from this quarter. So it will come between 23,000 and 25,000. Now, if you look at the numbers that we've just seen before for April and May, that means that for June, we should see a significant increase there. But still, if you take the 31,000 from Q1, 24,000 Q2, how are they going to reach 250,000 by the end of the year? Of course, the second half of the year could look much better as they released new models, etc., etc. But will those models be more profitable? That is the question, especially now with the price war, which, by the way, this news came out a couple of days after the earnings report got released. So China's NIO cuts prices and ends free battery swapping as sales slide. Of course, most of us already knew that battery swapping was not going to be a long-term solution. So they say here the adjustment has been discussed internally for quite a while, and we took advice and suggestions from some users. It is the best timing to publish it, but we can't make everyone happy. And yes, of course, we saw this coming, price cuts across the industry. So if you're one that said, no, we're not going to participate in that, your bottom line is going to get hurt. Second of all, battery swapping is not profitable at all. You've seen this for a while. Finally, they are making some changes there. In my opinion, a couple of years' time, it won't even be a thing anymore. That's just my opinion. Now remember, not so long ago, NIO said that they refuse to join Tesla-led EV price war. This was mentioned during an interview with CNBC. So they said, for us, we will certainly not join the price war. I mean, you know what they say, it's better late than never. Anyways, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now, the good news is that management is starting to notice that a couple of things that they were doing for a while isn't working anymore today, especially not since other automakers have changed their strategy as well. There are price wars, economic uncertainties, etc., etc. You have to adapt. So, price cuts, good move in my opinion. No more free swap, battery swapping, good move in my opinion. And then in the earnings call, they said this year we've made some adjustments in terms of our cash spending. For example, we have delayed over CapEx investment and we have also delayed some R&D projects. At the same time, in terms of our global market expansion, we believe it's more important to focus on the markets that we have already entered. And this is very important. I know a lot of people are excited to see, oh, NIO is going to expand in Europe, in other markets as well. I think currently, and I've been saying this for a while, currently they need to focus on their strongest market. Because right now, profitability has gone out the window. Margins out the window, net losses keep increasing. Focus on your core market. Focus on making sure those new models, which should be more profitable for them, focus on those things right now, currently. And then when we're out of the difficult situation, then try new things. But currently, it's already difficult as it is. Now that said, we're looking at the graph here on a daily chart. Currently, we are going to be a bit overbought after that big run up here in the last 2 weeks or so. But we are still far, far away from that 200-day moving average. Now again, we're a bit overbought. I always say this, try to buy on red days, not on green days. And then if we look at the weekly chart here, we can see that RSI is still pretty neutral. You can see here this week a big green candle, but still far away from the 200-day moving average, well above the 50 and the 20-day moving averages. But MACD still bullish, although still under the zero line here. I think there's still a long way to go for NIO. The market will want to see next earnings call or maybe the June delivery numbers be much better than what we've seen in the last 2 months. And of course, if you look at the last couple of big green candles here on a weekly basis, it was followed by a big red candle. So keep an eye out on that. All in all, with NIO, although it is pretty popular, I do think there is still a lot of risk attached to it. I mean, you can keep releasing new models, etc., etc. But if your profit is non-existent, if margins are not becoming better over time, then what's the point? Especially for investors, what's the point of going with NIO if you can take a safer bet with BYD, with Tesla, for example, maybe even if you want Ford or GM if you believe in those companies. But purely going with NIO just because it is a smaller player right now, just because the stock is down heavily since its all-time highs, I don't think is a logical thing to do, especially not in the current market environment, and especially not after we've seen their numbers in the last couple of months. There's still a lot of risk attached to it. Of course, if they can make it out of this situation, then yes, I do believe they will become a stronger company over time. But so will other companies as well. So it's all about balancing the risk and reward here. I know a lot of you have NIO in your portfolio, but I know a lot of you that hold NIO are also very, very realistic about the situation right now. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.